So, Rishi, what about the asset? We realized that you visit all the assets. Have you visited the Jaipur one?
Yes, Raj. So thanks to you for allowing me to visit Jaipur asset as well. Yeah, friends, we have visited the Jaipur asset as well, and we have seen the location. Now, in this case, when I visited, I was a little early for this asset to be visited, as in I visited the location. This is the BTS asset. BTS basically stands for build to suit. So it is made as per the specs as what client is looking forward to. In this case, the tenant, like we mentioned. Just to add to this, this asset is part of Mahindra World City. Mahindra World City has its own norms to build the asset as the way there are certain do's and don'ts that are specified by Mahindra as to how you can construct the asset and all. We know the spec sheet is really strong. We know the tenant in place has a strong requirement with regards to the asset that's coming up. So total, I think 1 lakh, nearly 1,37,000 square feet of asset is being constructed, out of which 1,16,000 square feet is the ground area, and roughly another 20 odd thousand square feet is mezzanine area that's going to be constructed as per the requirement of the tenant. Looking at the spec sheet, we know that it's going to be a very good asset that is going to be constructed, and of course, as per the norms, because Mahindra is quite strict about the way assets should be constructed in the vicinity that Mahindra World City that it is building along with partnership with the Rajasthan government. All in all, Raj, I think because still the asset needs to come up, and that's the reason we would want to give 0.3 on 0.5 for this particular point. Raj, what's your take on the IGBC rating and the OC received, and whether this asset can be further subdivided with an independent access?
IGBC rating, Mahindra Origins itself is IGBC rated, and therefore, by default, any construction that will come in will have to be IGBC rated. And what this means for our investors is that the reason why we look at IGBC rated construction is because the maintenance goes down because you're using solar energy or managing your wastewater efficiently and all of that. So eventually, the reason why IGBC is important is because these kind of constructions use solar to.
Raj, what does IGBC stand for?
Yeah, IGBC stands for Indian Green Building Council rating, which is to say how sustainable the property is in terms of all the resources that they are using. Like, for example, you could generate your power through solar, you could manage your wastewater efficiently, and in a lot of places, you also by default need to have a underground tank so that when the rain falls, you're basically collecting the water there. And your dependency on external sources or the local municipal ideally should reduce. And the reason why this is important for us from a financial perspective is because if these are IGBC rated properties, the maintenance is going to come down. Now, again, what that means is eventually if there is a property which is not IGBC rated and the one which is IGBC rated, the one which is going to be IGBC rated is going to be far more in demand, right? And also, we've explained the financial reason, and most of the companies that also are taking these kind of properties would want to ensure that their costs are low while running the property, right? While they are at the property. So therefore, automatically they are in demand. And of course, it also is now important to make a statement that we are in a green building, right? And our factory is IGBC rated with all the climate change and all of that's on our head. So that's very critical, and therefore 0.25 on 0.25. In terms of OC received, which is occupation certificate, no, it's not received because, like you said, it's built to suit, it's still being constructed. And so as and when the occupation certificate comes is when we will be able to award any marks there. And now, can it be subdivided with independent access? Currently, it cannot be divided. Actually, generally speaking, warehouses are because they're in blocks. But on email, we've got a confirmation from Strata that it cannot be divided with independent access. So we are going to go with 0 on 0.25. Rishi, what about the asset location?
Yes, like I shared, I was fortunate enough to visit Mahindra World City a month back, and it's a beautiful sight to see the kind of development that has happened. Mahindra World City, if we look at, is an established technology and industrial hub with a very, very strong and a robust infrastructure that's being developed. Now, this is a joint venture between Mahindra and Rajasthan government, and they are developing a beautiful setup with a very, very strong infrastructure for companies to come and set up their shops here. Now, when I say technology and industrial hub, What I mean is there is an SEZ which is already operational, and Infosys is already operational in that SEZ. Yes, Raj.
What is the SEZ?
SEZ stands for Special Economic Zones. So basically, there are companies which are having benefits with regards to whatever products that they are manufacturing. They can basically have waivers, or basically they're exporting their products out of the country and it is not for the domestic consumption. Then they have tax waivers and they have certain benefits with regards to their operations. And that's the reason it's called Special Economic Zone. So you have SEZ that is already operational. You have industrial hub. Mahindra has beautifully divided the entire area into different zones, and there is a warehousing zone, there is an industrial manufacturing zone. The good part is this particular Mahindra World City is actually on Delhi Ajmer highway, which is part of the Delhi Ajmer. So location is very close to the Delhi Ajmer expressway. It is, yes, Raj.
This is also the road that is going to connect Delhi to Bombay.
Yes. So I was just going to share that this is part of the Golden Quadrilateral now, where this is. So there was a dedicated freight corridor which is being developed between Delhi and Mumbai, and this is going to play a very, very important role, this infrastructure. When you look at that, we know that the location is of very utmost importance. If I want to share certain more facts, is basically this is National Highway 48 is just 4 kilometers away from this particular site location. We have railway station which is 17 kilometers away. We have a Jaipur International Airport which is 26 kilometers, and we have Outer Ring Road which is just 2 kilometers away from the current site. Now, if I want to just mention about the tenants that are there in the vicinity. So you have Delivery, you have Amazon, you have Flipkart, you have MetLife, you have Deutsche Bank. All these guys are currently operational. Right next to us is Delivery. We have JCB, you have Gatson Energy, you have Fackelman, you have Peto. Now, all these are part of the Mahindra World City. So, all in all, when we look at the entire infrastructure, the way things are shaping up in Mahindra World City, we know that this location is a very futuristic location. Second, I would just want to highlight that the plot that we are talking about is probably the last plot that is available for the warehousing operations earmarked by Mahindra. So, in this particular phase, so there is no another warehousing plot that's available right now. So, in case someone wants to set up something out here, the plot is not available. Also, if you look at this development started way back in 2006 and 7, and the operation started in the SEZ and the surrounding industrial parks roughly around. Yes, Raj.
So does that mean that there is no vacancy? Is that what you're saying?
Yeah, that's correct. There is no supply currently as per the
In this phase.
In this phase. So that's something really important. What I was sharing was, if you look at the particular spine, this particular plot is on the right main spine road. So there's no supply technically if we want to look at the current situation. And the pricing, if I want to just mention that the pricing way back in 2000, when the operation started, say in 2006, 7, 2010, 11, and what the pricings are, they have already appreciated even in last 1 year, where currently the developer who has purchased this and who's selling it to Strata had purchased a year back. Even there is an appreciation in terms of the pricing that was there a year back. Current pricing are definitely appreciated. And like Strata mentioned in the webinar, they already had offers from the family offices to purchase this particular entire asset at the appreciated price. They have been happy to bring this asset to on the platform for investors like us to ensure to take the benefit out of it. So all in all, when you look at the asset location, it's a very, very promising and upcoming location, and we will not go wrong in terms of the futurist appreciation as well. Yes, Raj.
Is there some stat around what part of the northern part of the country can be catered to from this location? I think it was around 40%. Is that true?
Yeah, that's correct. This particular road will give an access to and cater to entire 40% of the area that's there connecting the borders. So this piece will work as a very beautiful infrastructure in connecting a lot of locations across.
So this will mean that we'll be able to cater to 40% of the Indian population, which is in the northern belt from this location.
That's true.
Okay, great.
So yes, with this, I would want to share that 0.7 for 1.7.
Right. And so therefore the tally for know your asset goes to 1.3 on 2. And with that, we're going to get into knowing your. So we get into now knowing the deal. So in terms of duration, it's a 9-year agreement. We want a minimum of 5. So we give it 0.25 on 0.25 there. In terms of lock-in, it's a 4-year lock-in. And minimum standard is 3 years. So therefore it gets full marks there, 0.3 on 0.3. In terms of penalty or corporate guarantee, well, it does have a penalty clause, but since it's not a registered agreement, we are still on the LOI. We cannot award it marks here. So therefore 0 on 0.2. Again, what I've just discussed, this is still a letter of intent stage and not a registered agreement to lease or registered agreement or a lease deed. Therefore, it gets 0 on 0.5 there. The reason why we prefer a registered lease deed is because sometimes between the LOI and the registered agreement there could be changes in some terms, and also LOI is not binding. So with that we get on to the next one. Rishi, what about the increment, rent start date, deposit, and the notice period?
Thanks, Raj. So the increment in this case is 10% every 2 years. Now, as per our normal standard rating, we used to go for 5% every year or 15% every 3 years. But 10% to every 2 years is also falling in tandem with the kind of ROI increment that we see. So that's the reason we would want to give 0.5, 1.5 for this particular point as well. When you look at the rent start date, well, generally in this case, we always say that it has to be immediate or probably in the 30 days time frame of once the documentation is over. In this case also, once the drawdown happens, probably which will happen in next 2 to 3 weeks, documentation should be done, and by I think mid-June, end of June, the rent should start getting deployed. So again, 0.25, 1.25. When we look at the deposit, we have only 3 months of rent here as deposit. Ideally, we always recommend and suggest that at least it has to be upwards of 6 months and above. The reason is it gives a good cushion for the existing landlord or the investors to have that time frame. For example, if the tenant defaults or if something happens, you have that cushion period. Coming to the notice period, in this case, we have 6 months of notice period that is in place, and that is after lock-in. So technically, a lock-in is basically a 4.6 years, 4 years, 6 months. Now, why this is very, very critical and important, whenever a notice period is being served by the tenant, you have that much time before the tenant moves out. And in this case, we have 6 months of time to find a suitable replacement for the existing one. This is a good timeline for any tenant to be scouted. We know Strata has a good leasing team also in place. So if at all the situation comes about, they'll be able to lease this. That's the reason you would want to give 0.25 and 0.25 for this point as well.
Great. So that takes know your deal to 1.7 on 2.5. We now come to the most critical of it all, and the return on investment. The net average ROI for the first 3 years is 7.87%. It's a shade lower than what we would like, which is 8%, and therefore we've given the rating a shade lower than what it should be, which is 0.9 on 1. Rishi, tell us about the tenant stickiness and whether the tenant is going to spend capital on the property.
Sure, Raj. In this case, we know that tenant is going to take up an asset in the Mahindra World City, Rajasthan. Now, when we always try and share about tenant stickiness, we always want to share that what are the market rentals that are prevailing in this particular vicinity right now. As per the webinar, as what Nihar shared, the stats that are around, the brands which are sitting in the vicinity are, yes.
Have you spoken to anybody?
Oh, yes. So we have done our research as well with regards to local channel partners out there in Jaipur. And all in all, when the data comes across, 2021 is the price band wherein per square feet is where the rentals are prevailing in this particular setup in this location. Fortunately, with regards to the area that we are taking up, as in the tenant is taking up a total of 1,37,000, the average price for including the mezzanine and the ground, it comes about roughly around 18.6, 18.7 approx. I mean, that's the number that's had been come across. So that's a fairly a good rental to have, because even after the increment that happens every 2 years, we will still be lesser than the market rentals that will be prevailing. So probably after 4 years, the tenant, say for whatever reason intends to move out, probably we'll be having an option to mark the rent to the market, and that will be an opportunity for us. In this case, yes, like the rent is below the market rentals, so 0.5, 1.5 for that particular point. Capital expenditure, well, any industrial setup or a warehouse setup that's being done requires a good capital expenditure that needs to be done by the tenant or the company that's moving in. In this case, also, all the infrastructure that's required to set up the operations to ensure they have seamless movement of the goods coming in and out for the warehousing operations is all going to be done by the tenant. So again, we know that once the tenant is committed to invest in setting up the operations, or basically in machinery or whatever the requirements are. We know that they are going to stay for long. That's the reason we are again going doing 0.5, 1.5 for this particular point as well.
So that takes our tally to 1.9 on 2 for know your ROI. And now we come to knowing the asset manager. Rishi, what about the asset manager and their background?
We have definitely shared about Strata and Sudarshan and Priyanka in our previous reviews as well. And we are again quite bullish about the way these guys are functioning. They have a strong background. They have been backed by Elevation Capital. You have Gruhas, you have Kotak who are backing them. Sudarshan, being a lawyer himself, has a very strong experience in the real estate sector. They have a fantastic team. We all have witnessed that exposure by connecting with them. So all in all, when we look at their background, their team, we definitely know that this team is there to stay for long, and that's the reason we want to give 0.5, 1.5 for asset manager background and team. Raj, what's your take over the asset manager being profitable, whether they have a good client dashboard, and whether they have given any profitable exit to their investors?
So currently they are not profitable. They are at break even, but we'll only be able to award marks once they are profitable. Hopefully this financial year is when we'll be able to award them marks. And in terms of client dashboard, Strata, I believe, has been the pioneer when it comes to setting up the dashboard, investing in technology. And this is not just for investors, even for channel partners, right? As investor and channel partners, it's incredibly useful to have an app that gives us all the details that we need from an investor's perspective, maybe all the TDS certificates, all the ledgers in terms of whatever the transactions are done, etc. All of that in one single place. And therefore, we give it 0.25 on 0.25. In terms of profitable exit given for any asset, currently they haven't. Again, Strata has been around for about 3.5, 4 years. Short time for them to give an exit, but we understand that they are looking at giving an exit this year. And until they do, we'll continue to give them 0 on 0.25. Rishi, what about total assets under management and why is it important?
I would like to touch with the why part. Any asset managing platform, those two are very strong learning curve, right? From starting and launching their first asset on the platform, getting it funded, making it live and running and managing the operations to running the cluster of assets. So currently, if we look at Strata's table, they have assets roughly 900 plus crores and probably a few more 100 crores in the pipeline that they will be launching soon. Any asset manager has gone through, and likewise, Strata has gone through that learning curve and they have evolved. And every asset that comes from their stable, every time they are trying to do something new, they are trying to evolve with that. So that's the reason we have ensured that we mark this category very important because it speaks about how evolved and how mature the platform is. In this case, they are definitely 500 crore plus, as in 900 crores at approximate value that they are managing right now. So we would want to give 0.25 on 0.25 for this particular point as well. Raj, what's your take on the hurdle rate?
So the hurdle rate is a benchmark or a threshold beyond which asset managers take a performance fee. In this case, the performance fee is 20% and the hurdle rate is 10%. To put it in context, let's assume that you've invested 100 rupees, and just for you to know, performance fee is applicable only at the time of exit. So let's say 5 years down the line, you're looking at an exit and you get an average annual return of 12 rupees. So since the hurdle rate is 10, that's 10 rupees. So you will have to pay 20% on 2 rupees. That's 40 paise, right? And we think it's actually very critical that an asset manager takes performance fees because it means their skin is in the game. Not only will they look for the right kind of asset, they will also look at buying that right kind of asset at the right price point. Because if they don't, which means if they're paying maybe a little higher, it affects their profitability. And therefore, we believe that hurdle rate is very important. Again, ideal for us would be 12%. Maybe asset managers can take 20% over 12%, but it is 10%. So therefore, we are giving it 0.4 on 0.5. With that, our tally for know your asset managers goes to 1.4 on 2. And that leaves us with our last category. Rishi, what are your 2 cents on this?
Sure. So, Raj, there is one aspect I would want to touch here, and that is about the asset in terms of the land area. Now, since this is a part of the Mahindra World City, this is a lease land. So, there is an 84 years of lease that was in place. 1 year has already gone by because the developer had purchased it. and now is selling it to Strata. So 83 years of lease period is there remaining with this. Of course, it's a leasehold land, but the best part is we should be not worried about the title which is in place, because this has been bought from World City, is basically a joint venture between Mahindra and the Rajasthan government. So we know that the title is absolutely in place, and the development that's been happening out there is amazingly it's really good with regards to the way it is happening up. So if we look at all, so like I said about the asset location, asset is going to be grade A. We know the infrastructure rules, norms laid down by Mahindra World City to construct the asset. We know the tenant is one of the very amazing tenant in the industry of FMEG, that is fast moving electrical goods. So if we look at the entire combination with regards to the deal structuring and all, I think this is something that definitely one should go in for. So that's my take on this particular thing. What do you think about it?
So all in all, like you said, it checks all the boxes. Broadly, A grade asset, excellent location, very good ROI, great asset manager. And from that perspective, the entire holistic package, which is what we are attempting with the review, because it's not, we don't look at just the ROI in isolation or just the tenant in isolation, but as a combined package, this is looking very good. And therefore, we give it a thumbs up and we say that 0.25 on 0.25 there, which takes our tally to 7.55 on 10. Of course, given that this is still at the LOI stage, the moment that this is registered, again, the points would have gotten bumped up, but it is what it is right now. Even given the situation that the proposal is in, we don't expect it to be available for more than 48 hours. And therefore, also, yeah.
Raj, by any chance, do you know how much it is funded right now?
I think it's funded by 65% almost, is what Nihar mentioned in the webinar today. So 65% funded, other 35% we are expecting very quickly. So if you are interested in investing in this opportunity, please get in touch with us ASAP. Our numbers are on the screen. And to let you know, apart from the fact that we take a lot of pains to ensure that you all are investing in the right opportunities. So not only seeing the site personally, which Rishi has visited, but also we've come up with our own rating system that you can see today, right? And besides that, we also offer documentation support and exit support. And what does that mean? To understand that, please call us. With that, we are wrapping our review up and hope you found this useful. We look forward to interacting with you. And this is Racha saying goodbye. Thank you.
This is Rishi Daria. Thank you.